After 15 minutes of waiting for autos every morning, you have had enough. You see that bike in the showroom? Shiny, fast, yours. Well, almost. But there is a problem. You don't have 2 lakhs lying around. And taking a loan, that just makes the bike more expensive. What if you could save for it, bit by bit, every month, and still earn guaranteed returns while doing it? That's exactly what a recurring deposit or RD helps you do. An RD is basically a savings option where you deposit a fixed amount each month and the bank gives you a fixed guaranteed interest in return. It rewards regular saving habits and helps grow your money 1 month at a time. Let's compare fixed deposits, recurring deposits and SIPs to really see where RDs really make sense. Let's say you want to invest 1.2 lakhs over the next 1 year. If you already have the full amount right now, you could just put it in a fixed deposit. One-time effort, fixed returns, simple. But let's be real. Most of us don't have a lump sum lying around. And leaving it in a savings account, that money barely grows. That's where plans like RDs and SIPs come in. You invest 10,000 each month. By the end of a year, that's 1.2 lakh, the same principle. But here's how they play out. RDs, fixed returns. You know exactly how much you will get at maturity. SIPs, returns vary because they are linked to the stock market. In a good year, SIPs can give you 20-30% returns. But in a slow market, it may drop to just 3 to 5%. And the worst case, you may even get less than your principal. That's why RDs are perfect for short-term goal-based saving. You know how much you need when you need it, and RDs give you that certainty. SIPs, on the other hand, they are built for the long run, investing for 5-year, 10-year or even longer tenures. Now, let's break down how RDs work and how your returns are actually calculated. If you find numbers boring, you can also skip to the best RD rate section later in the video. Suppose you are investing 10,000 rupees every month in an RD that offers 6% annual interest. First, consider this 6% as a cake. If we make 12 segments of this cake, each will give 0.5%. And that's how interest is given out every month. So in the first month, you invest 10,000 rupees. You earn 0.5%, which is 50 rupees. In the next month, you add 10,000 more. Total principal becomes 20,000. You earn 100 rupees in interest. By the third month, your principal becomes 30,000 and the interest is 150 rupees. So after 3 months, you have earned 300 rupees total in interest. Now, here's the magical part. RDs compound quarterly. That 300 interest gets added to your principal at the end of the third month. So for the fourth month, your principal will be 40,300 instead of just 40,000. And you will earn rupees 201 as interest. To summarize, at the end of every 3 months, the interest you have earned every month is added back to your principal. And this cycle continues until your RD matures. It's slow at first, but compounding accelerates your returns as time passes. If you want a detailed explanation of how compounding works, then check out this video. Let's see RDs in action with Stable Money's RD calculator. It shows exactly how your savings will grow over time. Let's take an example. You invest 10,000 rupees every month at an interest of 8% for a period of 5 years. As you can see, your total principal or total investment will be 6 lakh rupees. The interest earned adds up to 1,38,000, which means your total matured amount becomes 7,38,000 rupees. That's the beauty of RDs. By just investing 10,000 rupees monthly, you can save over 7 lakhs in just 5 years. Let us now look at what top banks are offering today. HDFC Bank offers the highest RD rate of 6.6% for a tenure of 18 months. Senior citizens get an additional 0.5%. Post Office offers RD in only one tenure, which is 5 years, offering 6.7% for both senior and general citizens. But before you book RDs, here is something important that you need to know. Missed installments may attract a small penalty. Most banks charge between 0.5 to 1.5% of your monthly deposit as a penalty if you miss a payment. For example, on a 10,000 rupees monthly installment, a 1.5% penalty would be 150 rupees. But now, there are smarter options. New age RDs. No penalties, no manual work, everything runs on autopilot. Small finance banks on stable money like Shivalik and Suryoday offer RDs with not just higher rates but smarter features. Shivalik Small Finance Bank gives 8.3% for 2 years. Suryoday Small Finance Bank gives 8.4% for 5 years. These are currently the highest RD rates available in India, but the benefits go beyond interest. Let's compare them to typical RDs. First, as discussed before, in most traditional RDs, missing even a single installment can result in a penalty of up to 1.5% of your monthly deposit. But with these RDs, there is no penalty at all for missing a payment. Second, while most banks do allow autopay, you usually need to set it up manually. With these RDs, autopay is the default and payments are seamlessly linked through trusted UPI platforms like Google Pay or PhonePe. Third, traditional RDs don't allow much flexibility. Once started, they expect regular uninterrupted payments. But here, you can pause your RD for up to 3 months at a time or even stop altogether. The best part, whatever you have already invested keeps growing till maturity. Fourth, early withdrawals in regular RDs can be restrictive. For example, post office RDs often require a 3-year lock-in. These RDs, however, allow withdrawals after just 7 days. And finally, one powerful feature, top-ups. You can add up to 10x your monthly amount, capped at 1 lakh into the same RD. Let's say you start an RD today at 8.4% interest with 8,000 rupees a month. A few months later, FD rates drop. But you want to park extra funds? You can top up to 10x the amount, 80,000 rupees, and still earn the same 8.4%. So despite any rate cuts in the future, your money can still be invested at higher rate. Now, finally choosing the right RD starts with one simple step. Set your goal. Let's say you are planning to buy a bike worth 2 lakh rupees in the next 1.5 years. Head to the RD calculator and check what monthly amount gets you there. For example, with an 8.3% RD from Shivalik Small Finance Bank, investing just 10,500 rupees per month, you can reach your target in exactly 18 months. And the best part? You will know the money will be there, guaranteed and on time. To explore these high interest RDs with all their flexible features, head over to the Stable Money app. You can compare options, use the calculator and choose the RD that best aligns with your personal goals. And you can directly use your existing savings account to book FDs and RDs. Your deposits are also insured up to 5 lakh rupees by RBI subsidiary DICGC. We hope this video helped you understand how RDs work and how to use them effectively in your financial journey. Thanks for watching. If you enjoyed this video, please like, share and subscribe.